Hello everyone. Today we are taking a deep dive into this BBC News story, the insider trading suspicions looming over Trump's presidency. We are going to break down exactly what happened here and what the real risks are that every investor should know about. But before that, you are watching Let's Decode the News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into it. Throughout U.S. President Donald Trump's second term in office, traders have been betting millions of dollars just before he makes major announcements. Before the news drops, not after. That one word is the whole story. Markets react when information goes public. The moment someone moves before that, something is broken. Now here is what makes this more than just a theory. It found a consistent pattern of spikes just hours, or sometimes minutes, before a social media post or media interview was made public. Same pattern, different markets, different months. This many times, that is not coincidence. That is a problem. But here is what happened the moment that announcement dropped. Market data shows a huge surge of bets were placed on the price of oil falling, a full 47 minutes before the reporter's post. 47 minutes early. They knew a private phone call's content before it aired. That is not skill. That is access, and it has a legal name. Here is the number that changes the whole conversation. The traders who placed those bets will have made millions of dollars from the movement in oil prices. Millions. While regular investors on the other side lost real money playing by the rules. That is a fairness problem that hits real people. This is the part that stopped me cold. 14 minutes before the president's post there were an unusually high number of bets on the U.S. oil price. 14 minutes. Professional traders react in milliseconds. Someone 14 minutes early on a surprise post that shocked experienced observers did not guess. They already knew. Here is the line that should make you think twice. The trades appeared abnormal. For sure, one oil analyst told the BBC at the time. Abnormal. From someone who reads market data every day for a living. When professionals choose that word publicly, the pattern has gone beyond what anyone can explain away. Now, here is what nobody is really talking about. Some traders bet over $2 million on the stock market, increasing that day, even though it had gone through 7 days in a row of losses. 7 days of red. 2 million on a sudden reversal. That confidence does not come from optimism. It comes from knowing something the market simply did not know yet. Here is the number that stops you cold. The huge surge could have generated them a profit of almost $20 million. 20 million. One day. One announcement. You cannot explain that without asking very uncomfortable questions. But before you brush this off, look at what happened next. In December 2025, one user created an account on Polymarket called Burdensome Mix. It placed its first bet on Venezuela's President Maduro being out of office by the end of January 2026. Fresh account. No history. One specific bet. Strange already. But what came after is what really gets me. Here is the part that puts everything in perspective. When Maduro was removed from power the following day, Burdensome Mix won $436,000. Next day, $436,000. Then username changed. Never bet again. People who win big always come back. Unless they know that coming back would draw the wrong attention. Here is the final number you need to know. 6 accounts were created on Polymarket in February. All placed wagers on military action against Iran by 28th of February. When confirmed, the accounts earned $1.2 million between them. 6 fresh accounts. Same event. Same timing. 5 gone afterwards. That is not independent research. That has a very different shape to it. That is exactly where my take comes in. The evidence is right there. Timestamps documented. Pattern repeated across multiple markets. The law covering government officials has existed since 2012, rarely if ever tested in court. Not because cases failed, because they were never brought. A regulation professor told the BBC, without tracing information to the original source, there is no case. You can see the trades. You can see the timing. Without the chain of who told whom, it goes nowhere. So what does this mean for you? Stop chasing short-term moves around political news. By the time you see the headline, someone else is already out. You are not working with the same information. And you never were. Think longer. Stay diversified. Those 60-second swings are not your opportunity. They are someone else's exit. Are our laws actually built for a world where one post moves markets 25% in 60 seconds? Based on this report, probably not. Hit like, subscribe, and drop a comment below. Is this genuine insider trading or just very smart pattern reading? Tell me where you stand. Every comment gets read. Quick disclaimer: educational purposes only, not financial advice. Always do your own research before investing. This has been Let's Decode the News. See you in the next one.